Welcome to the Universal Accounting Center's Advancing Your Accountability with your accounting instructor, Alan Bostrom. In Session 2, Auditing Your Books for Accuracy, you learn how to perform an internal audit. This simple 3-step process will enable you to identify errors in accounting records. You'll also learn how to perform account reconciliations and maintain property, plant, and equipment records. Finally, you'll see how you can become a more valuable member of the management team. And now, here's Alan.
Okay, turn to the financial statements that you've prepared for City Cycle Company on pages numbers 1.42 and 43. We're going to use these financial statements in discussing the concepts tonight that are important to what's called an audit. Now, first of all, let's understand the purpose of the audit. An audit's purpose is to ensure that you are in conformance with laws or rules and that you're accurate, okay? In other words, in the case of accounting, we're checking the accuracy of the financial statements. Now, first, I want you to understand that there are 3 different types of audits, okay? An audit that probably you've heard about the most, particularly in recent months, is what's called an independent audit. It's performed by CPAs. Its purpose is to go into a company and test the accuracy of financial statements so that they can sign a letter stating that these financial statements, in their opinion, are accurate. They're not guaranteeing their accuracy. They're not ensuring that the numbers are correct. They're simply saying, based on the tests that we have performed, these appear to be right. Now, in order to do that, they need to have training at a university. They need to go through and get an internship with the CPA, and then they need to take the CPA independent test to become a CPA, and then they can perform that audit. That is the only process that you must be a CPA to perform. And there are CPA firms out there that do primarily independent audits. You'll have everything from a 1 CPA firm up to these large international CPA firms. In fact, there's 4 CPA firms that we call the Big Four. They're all over the world. They handle the most part of the Fortune 500 corporations, okay? And you might have remembered the discussion of one of them that is pretty much gone away now. That was the Big Five, now it's the Big Four, okay? So that's an independent audit, must be a CPA. The second type of audit that I want to talk about is what's called a compliance audit. Now, most of the audits that you might have been involved with at one time or another is called a compliance audit. If you've ever been involved in an IRS audit, okay, that is a compliance audit. What are they checking to see if you comply with? They're saying if you comply with the IRS statutes. Are you deducting the right amount? Are you showing all your revenue? All those are things that are considered part of this compliance audit. The state tax commissions put out a compliance audit. But there are other types of compliance audits as well. OSHA, Occupational Safety and Health Administration, they put out a compliance audit to make sure you're dealing with those laws associated with that. Sales tax, there are sales tax compliance audits. There are property tax compliance audits. Most compliance audits are performed by the government. However, even within franchises, a franchisor has the right to go out and audit the franchisees. In other words, the McDonald's headquarters people, you know, the executives, have the right to send auditors out to the individual franchises to make sure that they're not selling something that is not condoned by the McDonald's Corporation. So that's a compliance audit as well, okay? Now, the type of audit that we're going to talk about tonight is neither of those. It's called an internal audit. Now, an internal audit can be performed by anybody and actually should be performed by whomever puts the financial statements together. Now, that would be whom? You, right? You're going to do the balance sheet, the profit and loss report. Do you want it to be accurate? Sure, we all do, okay? That's our job, is to make sure it's accurate. One of the mistakes a lot of accountants do, particularly bookkeepers, is they think, oh, the software's smarter than I am. So they enter all the data into the computer, then they push a button, print the financial statements. Without a worry, they pick it up off the printer and walk it into the boss. Now, is that a problem? Yeah, major problem. Because if you've made a mistake, is the computer going to fix that? No. Garbage in, what? Garbage out, okay? And so it's even more important today that you do an audit than it even was 20 years ago. Now let's talk about this audit process and what happens. So you should be at the profit and loss report that's on page number 43 in your book, 1.43. This profit and loss shows how much money your company has supposedly been profitable so far, correct? Okay, Dana, you've got that done. How much profit do you show?
$5,443.92.
$5,443.92. Are you happy with that number?
It's okay, depending on the size of the company.
Okay, so you're saying the quantity of the number may be good or bad, may be good in this case because of the size of the company. Are you happy with its accuracy?
Yes.
You are. Okay, now why? Why are you happy with its accuracy?
Because I've gone through and double-checked everything and verified totals.
Okay, but could it still be wrong even though you've done that? Okay, so what have you done to audit its accuracy so far? What'd you do? What'd everybody do in here, in this classroom? What did you do?
The answer in the back.
We looked at the answer in the back of the book, right? Okay, and it was correct, right? Maybe not first time, maybe not the second time, but eventually you got it correct, right? Okay, now wouldn't that be terrific if we had an answer in the back of the book? Maybe. You know what the downside would be? They wouldn't need us. They'd just buy the book, right? Okay, but because there's no answer in the back of the book, it means that we got to do a little bit more work, doesn't it? Okay, so let's talk about what we could do to ensure the accuracy, okay? So Nadine, how much profit do you show in the profit and loss report?
The same.
The same number, okay? Now, could you, Dana, hire Nadine to do the same set of books that you have done and then check and compare your numbers at the end? Could you do that? And would you, if you both came up with the same number, would that give you some level of comfort that the number's correct? Sure, unless you both made the same mistake, which is unlikely, you could have some satisfaction that that number's right. Now, would you do that, Dana, as a matter of method? Would you hire somebody to do the same set of books?
Not typically.
Why not?
Because it's an expense that sometimes you don't need being a small business.
Because it's added expense, okay? And you're saying that added expense kind of cuts into your profitability, and possibly there might be some other alternative than doing that. Now, in fact, on occasion, we do that. We have someone else do the books right next to us, more or less. Or it's called paralleling. And paralleling was done a lot back when we were converting between computer systems or from manual systems to computer systems. The reason why was, one, people weren't very comfortable with computer systems, and so they didn't trust them. But the other reason why is they didn't deserve a lot of trust, okay? Initially, they had a lot of holes in them and problems with them, and so in order to be able to provide the results to management in a timely fashion, the last thing they want to do is just make a conversion from one to another and not have anything to show for it, okay? So they would parallel. Now, today, the computer systems are much more credible. They don't have as many holes in them as they used to, and so more and more companies are just converting from one to the other if they haven't already without having doing the paralleling. However, we are going to talk tonight about sometimes where paralleling is still happening and where you want to take advantage of that, okay? Certainly it's too expensive to do it on a regular basis, so we wouldn't choose to do that, okay? Okay, now with that little introduction, let me just tell you that the first step, once you have prepared the financial statements, well, let's go back to that. Let's figure out where this step goes. What is the first thing we do every month? Remember those 7 steps that you have been introduced to? Remember, what's the first thing? You remember that first step? What do you have to do, first of all? What have you done over and over?
Transactions.
Record the transactions, right? We had to put those in first, okay? Did that get to be pretty mechanical? Yeah. Sure. Okay. Now, what'd you do next? Once you recorded all the transactions, then you did what? Totaled the columns, okay? Got a total for each account so that you knew what would go into the general ledger. What was the third step? Balance the journals to make sure the debits equaled the credits, correct? Okay? Just to make sure that we didn't have any problem in the journals, okay? Now, let me tell you what used to happen. Back when I was doing this as a teenager for my father, I would go through and record the transactions just like we've done here in class, okay? Then I would total the columns, okay? Now, as you're totaling the columns, might you identify an error? You know, you're totaling the office supplies expense column, and it adds up to $35,000, okay? Might you say, this does not sound right, okay? And so you go back in, you figure out, oh, I put this in the wrong column, you move it over the correct column. It's more accurate then, isn't it? Okay? Now, the next step then is to make sure that they balance. Might you notice an error there? Sure, okay? Consciously or unconsciously, you're kind of checking your numbers as you're going along, right? Okay? Then the fourth step is we do what? Post to the general ledger. Is that another opportunity when you're doing it manually to identify errors? Kind of consciously or unconsciously, you're going through and you're saying, this doesn't make much sense. You go back in, you find the error, okay? What's the next step? Total each account in the general ledger, okay? So we're figuring out what the balance is in the cash account, the bank account, what the balance is in accounts receivable, the balance in each of the accounts, right? Might you notice an error then? Sure, okay? Now, I don't know if you see what I'm getting at here, but back when we were doing the books manually, we were continuously auditing our numbers. Again, consciously or unconsciously, each of those steps involves something that we did that could catch an error, okay? However, again, on computers today, some of you have experienced accounting software. You enter the transactions into the software, right? Sometimes it's even quicker doing it manually than it is on a computer, but you do it, depending upon your speed, you enter those in, correct? Okay? When's the next time you see the numbers? When you prepare the financial statements, right? So if you made an error in here, what's the chances that you're going to correct it? No, you're going to put them in here. If you trust that the financial statements are flawless, or that the computer software is flawless, you're going to do what again? Push the print button, print out the reports, take them into your boss, okay? So the three steps we're going to talk about tonight are even more important today in this era of technology, because the second time we see them is down when they're all put together. It's more important you go through these steps now than it was even back when we were doing it manually, okay? I know because I've worked it many, many times, and I know when I did it manually, it was more likely to come out to be the good answer at the end than went now. Because all you got to do is just push the wrong button. Push a 3 instead of a 5 on the keyboard, and you've got the wrong results, don't you? Okay? And that's so easy to do with computers today. So we have to watch it. Okay?